Welcome to this concluding breakout session. It's my pleasure to welcome you to the session which is called Blockchain Technology and Wire Fraud. Our presenter is Carole Crawford of Saturn Partners. So thank you so much for being here, and let's have a warm welcome for Carole Crawford.
Well, hi everybody. There's some other updates. I need to give Tom some newer information, but on top of that, I also had spent the go-go 90s in the merge and purge acquisition area of customer relationship management software, directing engineers in the field, and also for Network 2 and for Split Rock services, high-speed ATM networks and fiber. When everybody could be a provider of their own website realm before the big guys took over and the big crash happened. So I got into the business in 2001, and the main reason for the bank focus is that, of course, in 1999, we had the Gramm-Leach-Bliley Act, which was the first governmental body to really demand that an entity highly regulated such as banks, that they make sure that they're following policies and that they have outside neutral third-party testing done. It was still fairly loose, but banking was the first one, we're talking about 9/11 era, to really get with the program here. But we still find with our community banks, our smaller banks, and we've worked with a lot of those in the Midwest, they are still behind on a lot of things because they don't have the staff, and so we come in and try to help that with a lot of our services, which we'll brush over today. Basically, this particular topic, any of you who have my folder, there is a copy in the back of the folder of the front and back copy of of our new book, which was supposed to be ready to give you all a hard copy. So at the end of this, anybody who would like to have a copy of the book when it comes out mailed to them, it is on banking security, cybersecurity, taking control of management in the era of AI and frauds, especially for community and smaller regional banks. So when we're done, come on up, give me your card, I'll make a note on it, and when the samples finish running, I'll mail them out to you as a freebie. So anyway, let's get started here. This topic here is one that is inside the book, as well as other hot button topics that are causing people to stay awake in your industry, such as quantum computing and other challenges that will affect security, encryption going ahead. A lot of people want to think that, quantum computing is 5 years down the road, we don't have to worry about it, but we all saw what happened with AI, how fast that came upon us, and a lot of us we're not ready, and we're still trying to adjust, and banks have a lot to lose on this. To preface the start of the slides, a member of yours last year gave me the idea on this particular topic, and I started researching it because we were at lunch here a year ago, and I said, well, what's the type of issue keeping you folks up at night? And basically he said, I've got a question for you. He goes, can you research as to what's going on with wire fraud, international and domestic wire fraud, and how that's connected to blockchain technology and risks that for banks? And so I kept that in my head, and we had lunch when I got back to Chicago because my office is close to there, and I thought, okay, that makes for a good topic. So I decided to put that into a presentation, and this is my third time back here, second time speaking. So we're not going to get too deep into the engineering part of this because that's not the point. It's just to have a very high level look from a management and a bank holding executive perspective as to what's out there with this brand new technology and what you need to either be aware of or just be on top of. So hopefully if my slides move okay, we'll go ahead and get going here. Okay, first of all, I always open with this one, and a lot of people don't want to raise their hands, so I don't blame you. You can always tell me later after we're done, but anyway, has anybody seen a wire fraud attempt in the last 12 months in any of your entities that have been reported to you? I know, they're like, I don't want anybody to see my hand. But it's okay. As I've always said, because we've been working with banks a long time, you're going to get hit a million times a day or a million times a month, whatever. It's how far they're going to get in and how far are you going to let them come in based on the soundness of your cybersecurity strategy. We are working with one company where their entire program needed to be overhauled. And by that, I mean they did not have proper security policies to meet regulatory standards. They were not doing outside and inside assessments more frequently. They weren't watching the social engineering. They didn't have cybersecurity training. One thing we're finding that is a huge problem that is right at the center of this issue is that your incident response plan is basically your fighting team that's there with assigned roles, because the speed is the issue here, the way these things are happening, and now you've got to get on and get your team rolling to react to incidents as quickly as you can. And monitoring is something else that we do, but also the idea is to find it, contain it, eradicate it, and without any damageable downtime. And that can cover anything from money losses to reputation. So here's the scenario, the wire's gone, so's the money. The difference in the old days is that this is something that takes seconds to do. And as you know, if any of you have read anything on blockchain technology, you find out that this has no boundaries to it. International and domestic wire fraud, the main thing is when you're dealing with this type of technology and the speed that it's going to be, or it is moving at, it only takes seconds to execute compared to the old days. And another slide coming up will kind of compare the old with the new. And our community banks have enough challenges getting gobbled up by bigger banks, for one thing. But the main thing is that this is a real time sensitive element. So you've got no reversal, no recovery, and no warning. The bad guys don't hit at lunchtime on Monday. They'll be there, Easter Sunday at 2 a.m. or whatever. So those eyes on the dashboard is extremely, extremely important. And it is going to become mandatory, as it is in a couple other vertical markets of ours, that you absolutely have to have some type of a 24/7 monitoring presence, and our community banks rarely can afford to staff that. It's not practical, so we can do that too. But it's only one part of your program that should have all these different elements in it and have that incident response team at the heart to try to be on top of this for when it comes and how to handle it in the best way. One of the biggest things that's scariest in this technology is that you can't really reverse it. Once those funds clear, it's gone. This figure that's sitting at the bottom of the screen, it's outdated already. We just don't have the final numbers, but 2.9 billion lost to business email compromise, BEC, is back in 2023. These are FBI numbers, so they're accurate. $2.9 billion. So for a small bank, even the size of a smaller incident we'll see later can really tank your efforts to grow and possibly hurt you where it cannot be recovered. So this is from the Internet Crime Report. Another thing on business BEC, we don't have the time to go into it, but my card is in the folder, and any of these topics, I have a ton of literature on research because I finished this book, and the book has also extensive illustration on the dangers. One of the top dangers for banks still is business email compromise and how it connects to other fraud, and now it just moves at lightning speed compared to the way it used to do. Now we're talking about a convergence here. Just like a couple other vertical markets we work with, we had a lot of standalone assets that didn't have to be connected to the internet. Once they had to be connected to the internet, then all the security problems arose because you didn't have the expertise to test and make sure it was safe to tie a lot of these elements together. And this definitely pertains to a lot of your smaller banks who are understaffed, rural banks, things like that. So the whole banking environment, it's totally shifted. You've got the faster payments. You know these terms as well as I do. FedNow. You've got instant settlement, eliminating window banks. Once to catch fraud, they're gone. Digital assets with crypto and DeFi, and of course this changes all the time. So you always email us if you want the latest what's going on for your industry. It lets the bad guys use a borderless system, anonymous exit paths, and it's traditional anti-money laundering, which I think I've given a talk on that one before, but there's a chapter. We really go into money laundering in the book a lot. But that is the standard ways of handling even that can't track fast enough when you're talking about how this technology is speeding everything up. You've got a more sophisticated fraud crowd. These aren't your kids in the garage hacking away. These are nation states. You've got AI-generated emails, deepfake audio. We all know, we've heard about impersonating voices and faces. These organizations we try to stay ahead of, they never sleep. Some of them are so large and profitable, they have their own retirement plans, 401k, board of directors, and whether it's Pakistan, China, Russia, Ukraine, it's not coming from people who care about us, our country, or your assets, or your bank. So, you know, these people are really, really slick, and it's a different picture than even just a handful of years ago. Okay, here's where we're talking about traditional wire fraud and modern wire fraud. The goal hasn't really changed here. The processes are just different with the speed. Traditional wire fraud on the left, you had an execution over days' time. In your modern wire fraud now, it's just seconds, and it's borderless. That's the scariest thing too, because a lot of the people who are doing the biggest damage, because one fable, and it's in the book, that we always are trying to dispel, is that you're never too small to be attacked. And in previous years, in smaller bank associations like in Illinois, other ones that we still get that feeling that we'll do what we have to do to stay ahead of, with the regulators, but we're small fish. Well, now they have ways to troll for those small fish and do just as much damage, except you may not have as much insurance or as much money to lose or a reputation to lose. So you're crossing borders instantly. In the old days, you had detectable patterns to follow. You didn't have to be a technical genius or an expert in this field. Now with AI-generated work, you're talking about, well, everybody's AI was frightening everybody a year and a half ago. The genie's out of the bottle, so there isn't anything we can do about it. So we are settling down, learning to work with it, learning to educate your users as to what is fake and what isn't. And banks have stayed pretty much on top of that, but once again, our community and regional banks don't have as much staffing and funding, so we can usually come in and help there. So we have a nice sweet spot there. And we like working with our banks in the Midwest. We're Midwestern. So in the old days, you could recover this in some cases, depending on the nature of the fraud. Now the exits go through crypto and DeFi, and if you go back to the left side on the bottom here, phone and fax impersonation, that still happens, which is why your frontline employees also need training that they don't get. And even your IT guys who are not cybersecurity engineers like we use, and you're not expected to be an expert, that training needs to be ramped up so that they at least can learn how to spot an incident from a technical standpoint. If we're monitoring or if there's other things that are working, you've got a real chance to contain it and then figure out what to do with it. It moved very slowly in the old days, easily trackable. Now you can't get it back once it's gone. So the focus has to be on prevention, instead of reaction. Okay, I call these the three forces. So what this is here is that you've got speed eliminating reaction time. So your speed, you've got instant payment rails, no intervention window, fraud moves faster than any other human approval process. That doesn't mean the humans still, in cybersecurity, and I've said it since the beginning, it's your humans are our biggest security risk, and they still are. We trust more easily by nature and everything else. So a lot of times it's not the tools and the machines, it's what the humans are going to do and how well they're going to be prepared beforehand, during, and after. We got borderless systems. So with funds crossing jurisdictions, like milliseconds, law enforcement takes months, if it happens at all. And one of the things I'm sure you're frustrated with, and a lot of customers are, is when you get a note from an entity saying, well, 6 months ago we had this happen, 9 months ago, as our card holder or whatever, you are entitled to know about this. Well, we are trying to close that gap of notification, because if I get that, 6 months, that's ridiculous, but that's how slow it takes. Jurisdiction, legal enforcement has to work with your bank and your security team to make sure that if anything does happen, that you speed up that process. Irreversibility, like we said, blockchain is final. There's no undo. There's no undo. Recovery really is focused on prevention, which is having a security program which encompasses your incident response plan, your policies, your testing, social engineering, risk assessments, pen testing, and monitoring 24/7 to make it all work in one program. So your IT guys don't have to be the experts in this, and we can give them a lot. Companies like ours, we can give them a lot more what we call horsepower. The human door, here we go. It's still wide open. They still get through people. So even though you've probably heard every type of attack you can think of, it's still going to be the fact that they're getting smarter and slicker. It's getting harder to spot fake websites. It's getting harder to spot fraudsters. And so the training element at your front lines and all the way up to your IT department is critical. Once again, we have to prevent instead of trying to react and change a focus that's been going on previously in the banking industry for 100 years. BEC, I told you I can send you more information on this. This is a whole topic. Business email compromise. This is where your executives are getting impersonated. Vendors or attorneys who are spoofing you, compromising. They're trying to get accounts. They're trying to harvest credentials. And something that really is scary for me, and it's in my book, is how QR codes have made all of us very lazy to hurry up and take a picture with our phone to order a salad at Olive Garden or to do something at a car wash or a parking meter garage or whatever. And those are being hacked now to harvest credentials. So QR codes, you must be extremely careful. And also to counsel your banks and your bank's customers what types to stay away from. And there are categories that are more at risk for hacking when it comes to QR codes. Social engineering, it's not just the bad guys. Everybody knew about the MGM thermometer and how they got in and the casino area, because we do that too. Social engineering means it's not just the bad guys trying to get in and get your people to give them information. It's also from the inside out. It's not only disgruntled employees, it's also just ignorant employees or people that just either don't care or they're not properly trained or held accountable. So they're going to be trying to get through your people. Your frontline people are usually your youngest, your least experienced. And with social media, they don't really understand the privacy issue and how life and death it is for a bank, let alone anybody else. Human trust, once again. People trust other people, which is fine. Especially in the Midwest, we're really friendly, which has helped me, damsel in distress, quite a few times, I might add. Anyway, but it's just a matter of preparation, no matter which of these avenues we're talking about. Crypto and DeFi, which I mentioned, the recovery is pretty much impossible, which is, I know this is depressing right before lunch. You're probably all, I can hear your stomachs growling, so we won't take too long. But this is how the funds disappear. The wire lands in a domestic account, they call it a Mule. It's turned into cryptocurrency within minutes. Then they move it through what's called DeFi mixers and chain hopping. Way beyond the focus of this talk, but any of this I can always dig into, my cards in the folders, or like I said, come on up afterwards. But this happens within minutes. And then they move through the mixers and chain hop, and it gets cashed out in a foreign jurisdiction. So when my friend who was a member here asked me last year, he says, yeah, our international wire fraud we're really worried about for this particular reason, because it's a foreign jurisdiction is where most of these pilfered funds are going to, and it makes recovery almost impossible. Why does it fail? You have no central authority controls with blockchain transactions. Once again, prevent, be watchful. We have pseudonyms being used with wallets. It obscures the true ownership of where it's coming from. You have cross-border coordination, which can take months or years to unravel. We have our proximity to Mexico and to Canada. Well, it's borderless now, like we were talking about. Most of the victims recover nothing. And we're not talking about just banks, but just in general. Insurance rarely covers wire fraud fully. Now, I went to a cyber insurance convention in Chicago last week, and they're scrambling a lot because some of you are dealing with ridiculously high premiums, which was explained to me. The reason for that is that there's a lack of preparation, and the more they see risk in your organization and you not having all the elements of this cybersecurity program, the higher your premiums will be, because they have experts now in the cyber insurance companies in my area that will go in and say, this is weak, this is weak, this is weak, you can remedy this. I mean, it's not like so much like your regulators come in, but what they're doing this for is to find out how big a risk you are, and so you want to get those premiums down. They want you to get those premiums down because they don't want to have to pay them out because of lack of prevention. And once again, it's a problem with our smaller and regionals because everybody's shorthanded, especially with the top, that top or middle tier technical talent. This is called playbook. I always laugh at this term because it's a guy term. There's not a lot of women in my industry, but I've seen it change through the years. Basically, when this says the modern fraud playbook, when we say playbook, we're talking about putting together a complete cybersecurity program on all the elements that are within it that I mentioned, like incident response and regular testing and social engineering and training and things like that, and monitoring. So you have infiltration here on the top left. This usually comes in the most commonly through business email compromise or social engineering to gain the trust of your people on the inside. Then you have reconnaissance. They're researching the targets. They're watching everything online. They're watching your vendors if your vendors don't have proper security controls, which is something I'm sure you check on, but it's important. But they do research the targets and the executives ahead of time. When it comes to execution, here comes the fraudulent wire instructions with urgency, and we all know this one. You know, the customers are warned, you know, there's not going to be you don't need to make an urgent wire anything or your PayPal this or that. You know, you folks know they try everything, but the whole idea is to harvest the credentials, get the information somehow to send a fraudulent wire instructions and do it right now. Do it right now. No, we don't have time to check, but that's a huge red flag. And that can come in through an email, through a text, well, you know. Anyway, laundering, here's where we go. And with my book, the Anti-Money Laundering chapter, we talk about how this has changed. Because now we are converting to crypto and chain hop to cash out. It's just a side history note. I'm a history freak. People know me, know I just love history, crime history. In the old days, they started the term money laundering. It goes back to the 20s. And it goes back to the gangsters, where they were bringing in loads of cash through prohibition, through illegal booze in the 20s. And what are you going to do with all this cash? You've got to run it through what looks like a legitimate enterprise, a dry cleaner, a pizza place, if any of you have seen, you know, any of you have seen Goodfellas or whatever, to launder or clean out that money so it can be sent back out and not traced to something dirty. So that's where the term comes through, but it's the whole face of it's changed. And in my book, we talk about laundering and how fast that happens, and also, you know, ways to spot and to jump on this. The real world impact, that's pretty standard. It's staggering. Now, the losses I already gave you from just business email compromise, and that's only one way to get in. We have, for the BEC complaints, 21,000 have been, just in 2023, and now we're in 2026. So we've had all of these complaints that are pouring in faster than they can be handled. On the right is the number I want our community and regional banks to pay attention to, because this is really what you have to look at. The average loss per incident is 137,000. Now that's a couple years old. Community banks and mid-sized businesses they're not equipped. They're targeted. They aren't really able to absorb the losses. So here's a footnote that I had found. You know, a Midwest community bank, just a couple of years ago, they lost 1.2 million in one single BEC incident. The CFO got an email which looked like it was from the CEO requesting an urgent wire to close an acquisition, and the acquisition did not exist. So that's scary. Where are you most exposed right now? Zone 1, payment workflows, where you have manual processes, you don't have callback verification, or you have a lack of dual authorization. Now, I'm sure your banks are all using, you know, MFA, et cetera, but this is just zone 1. Zone 2 is under vendor management. Unverified account changes, stale records, no out-of-band confirmation. In zone 3, internal approvals, that's your email authorization, executive override, and urgency. Do it, do it, do it, do it now. Zone 4 is the human decision points, and here we go. Under trained staff, what is your escalation protocols? Do you have monitoring? Do you have a trust-based culture? And how are you staying on top of what is happening at any given time within your organization, no matter how small it is? One thing I'm really a big believer on frontline training, frontline employee training, because they are your weakest point. I've been saying for 2 decades that you're only as strong as your weakest link in your organization, and that's usually your front desks or whoever where your lower trained employees are. Getting that sense of urgency when you don't own it and you're not accountable for it can be very hard, especially in this day and age with less trained or less enlightened employees. So basically that's where we are on that one. And what I want to wrap up with here is, besides, this is all in the book, in your folder I put a copy of this presentation, and just a cut sheet, just generic things. My card is in there for you to send questions to. But we're really excited about the book coming out. I was breaking my neck, as Tom knows. I was ready to show up here with 100 fresh sample copies because it hasn't hit Amazon yet and it hasn't gone through the marketing. And they said, well, the cover is done. So the cover looks great, explanation, everything. So that's in the back of your folder. What that is the back and the front cover and what it's going to be all about. So if you want to come up here as we're wrapping up here and give me your card, my card's in the folder. Everything else that I mentioned is in the folder. The main thing is that I'll close with is that whether you call it a playbook or a plan, and all the regulatory bodies have a different way of calling it. But when I started out in this business, we talked about network security because banks had a off-site, they had a hot site, cold site, whatever. You had your disaster recovery and you had business continuity. Then you had a controllable environment where everything was on premise in your banks, no matter how that was done, no matter how backups or patching, however it was done. Now, this is, of course, since then, we've got the cloud. And then we've got the applications. Then we have the problems with smartphones. We have the problems with applications going out so fast or not being tested properly. And then the big bugaboo that is really awful is social media and how fast lies can travel, how fast fears can travel. And so it's really important, going back to that incident response plan, because we write them all the time, you better have a media contact. It just blows my mind how we'll have a very handsome looking line of incident response plan board team members or team members from your major departments to make sure everybody knows what's going on in the trenches. But no one is going to be, when the panic button hits, who's going to talk to the press? Who's going to talk to the media? When you have social media and the dangerous speed, your reputation could be totally destroyed if the wrong person gets to the press before you do. So whenever we build incident response plans and we test them tabletop, you better have a very strong media contact and keep those roles current. So you've got 9 or 10 different, 11 different things maybe in a full program that'll make any regulator happy. But the main thing is that now we're pushing, monitoring is so important. You need those eyes on the dashboard at an affordable cost with your smaller staffs. And we will continue to work with our smaller community banks because especially the rural banks, they just have so many issues and they need the help. And you know what? The regulator rules, they don't really care if you're small or large. But let me tell you, you can't afford to take the hits that a Bank of America can take or a Chase Bank can take and recover either financially. Your brand is trust, and I've said this before. What is your brand? It's trust. People are giving you money to hold on to and they're trusting that you're going to take care of it. So that's why I think banks got their act together sooner, way back when, but it took regulatory pressure. And now every industry is getting their own version of this and it's getting hammered home. So if anybody wants a copy of my book, come on up, give me your card. And I will send you a copy when it comes in, postage on me. And I want to thank Tom and BHCA for having me back again. And I hope this topic is timely. And maybe we'll get a chance to work with you. I have to get on the road again shortly, but Tom knows how to reach me, and now you know how to reach me, and I thank you for your attention.